All right, let's talk Block. Their third quarter earnings just dropped, and man, the market reacted fast and not in a good way. So, what's the real story behind the numbers? We're going to dive right in and decode this thing.
And when I say the market reacted fast, I mean it. Look at this, 11% down. Just bam. That was the knee-jerk reaction right after the numbers came out. The market gave its verdict, and it was harsh.
But here's where it gets interesting, right? This is the puzzle we're here to solve. You had a profit beat on some key metrics, but the big headline numbers, a miss. It created this huge disconnect. So, what exactly spooked investors? And on the flip side, what did the folks at Block see that made them sound so confident on the call? That's the real story. Okay, first up, let's break down the numbers. We've got to start with the top line, the big, flashy results that everyone looks at first. And honestly, this is exactly where all that initial doubt came from. So here's the deal. Adjusted earnings per share came in at 54 cents. Wall Street was looking for 63 cents. That's a miss. Then you look at revenue. They pulled in $6.1 billion, but the street was hoping for something closer to $6.3 billion. Another miss. For a lot of traders, you see misses on those two big ones. That's an instant red flag. Sell first, ask questions later. But, and this is a big but, if you just stop right there, you are absolutely going to miss the real story. Management was basically telling everyone on the call, hey, look deeper, look past the headlines, look at the engine of our business. And here it is. This chart right here is the engine they're talking about, gross profit. I mean, look at this. Overall, gross profit is up a super healthy 18% year over year. That's solid. But the real story, the thing that gets me excited, is Cash App. It didn't just grow, it accelerated, surging an incredible 24%. This is that fundamental strength the market just blew right past at first glance. So, to really get what's going on, you have to understand that Block is basically two different companies under one roof. We need to look inside the two ecosystems that power everything, Square and Cash App. Yeah, it really is a tale of two companies, isn't it? You've got Square on one side, that's their classic business for merchants. Their whole game right now is moving up market to bigger sellers and giving them some pretty powerful AI tools. Then, on the other side, you've got this rocket ship called Cash App. That's their consumer engine, and it's all about growing its user base and really becoming your main bank. And speaking of Cash App, the momentum is just wow. It's undeniable. We're talking 58 million monthly active users. That's a massive network. But it's not just about the number of users, it's what they're doing. Check this out. Their lending product, Borrow, saw originations just explode, up 134%. And they've got 8.3 million people now using Cash App as their primary bank. That right there is where the really juicy, high-margin growth is coming from. Now, don't sleep on the Square side of the business. While Cash App is getting all the headlines, Square is over here quietly having its best quarter in 2 years. Their gross payment volume, that's GPV, just the total dollar amount of all the transactions they process, it grew a solid 12%. And you can totally see their strategy is paying off. Volume from their biggest sellers, we're talking businesses doing over $500,000 a year, grew even faster at 20%. They're absolutely climbing that ladder to bigger, more stable customers. Okay, so you've got this really strong performance bubbling just under the surface. So what did management have to say about the future? I mean, the stock is getting hammered. The headlines look bad. But their message? It was pure, unfiltered confidence. They didn't just stick to their guns. They raised the bar. They actually raised their forecast. These are their new higher targets for Q4 and the full year. That's a pretty bold move. They're basically screaming from the rooftops that the momentum we just saw in gross profit, that wasn't a one-time thing. They think it's actually getting stronger. And they didn't stop there. They gave investors a whole new way to grade them. They specifically brought up the Rule of 40. Now, if you're not familiar, this is a huge benchmark for elite software companies. It's simple. You add your growth rate to your profit margin. They're saying their goal is to get that combined number up near 40. It's a clear signal to Wall Street. Judge us on this blend of fast growth and profitability. So, the billion-dollar question is, how are they going to pull that off? Well, Jack Dorsey's answer was about as clear as it gets, AI. And when you hear this quote, don't just think about cool new features for the app. No, this is way bigger. This is a vision to re-engineer the entire company's DNA around artificial intelligence. The goal is to drive massive efficiency and let their people focus on building the next big thing. So, all of this sets up a really fascinating situation for the next quarter, right? On one hand, you have a company that seems to be firing on all cylinders, even guiding higher. On the other hand, you have a market that's, well, skeptical to say the least. So what's our take on all this? What's the final call?
Here's our prediction. We think Block is going to hit that raised guidance for Q4. They'll make the numbers, but the goalposts are about to move. The market isn't just going to be looking at gross profit anymore. The new buzzword is going to be flow through. The big question is, can they actually turn all that great top-line growth into real hard profit on the bottom line? This is the first real test of that whole AI efficiency plan. And honestly, the stock's recovery completely hinges on them proving it works.
And that brings us to our final rating for Block as we head into this next earnings season. Our rating is market perform. Look, the execution here is strong. You can't argue with that. And the growth engine that is Cash App is the real deal. But they are up against a show-me market. Wall Street wants proof, not just promises. The company absolutely has to prove that this big, ambitious AI strategy can actually deliver that profit flow-through they're talking about. Until they do, we think the stock might just tread water while everyone waits to see the results.
And of course, just a reminder, this is just our analysis for informational purposes. It is definitely not financial advice. Please always do your own homework.